Inner city is more desirable for a bank because of the amenities, because we already know the area, we know the value of the land. We're not going to have the issues that we would if we were going outside of the city. One of the pieces to an infill is to understand what your land value is. Your house means nothing to us. The house that's on the property cannot have any value because we're not going to give it any value. So we're going to be more interested in just what the land is worth. We're going to really want your down payment injected right away. We don't want to be holding the land and then get partway through a build and find out that you've spent the money on something else. And that has happened. So we will want your down payment up front. Now your down payment this is where people go, where do I get my down payment? It's all in my home. A lot of times what we'll do is we'll look at your cash on hand, but we'll also do what we call an equity takeout on your existing house. So that means if you're living in a house right now, you've bought a project or a house that you're going to tear down, we can actually take a look at what your house is worth right now, and we can take equity out. Conventionally, that means without any insurance premium, we can go up to 80% equity takeout. This is where most people get their down payment. One of the unique things about Bank of Montreal, and it is unique to us, we will actually try to qualify you to carry both your existing home as well as the new build. And how we do that is we actually work with estimated rental income. So one of the first things you can do is you can do a refinance. And what that means is you can actually take a look at your existing mortgage, or if you don't have a mortgage, you can actually take equity out of your house up to 80% and then high ratio, a little bit higher, but only 85 with the new rules. But 80% gives you a lot of flexibility, but you may not want to spend that whole 80% at once. So it depends on what you're going to do, how the process and progress of your build is going to happen. So you'll want some flexibility. So what we suggest is you utilize either a ready line product, which means it's a mix of a mortgage and a line of credit at the same time. Your mortgage rates are the best rates. So utilize mortgage rates over your outside lines of credit, unless you've got some great rate, which most people don't. I mean, the average rate on a line of credit is prime plus 3. On a mortgage, we can go below prime. So you really want to understand how long your build is going to take, match up the term, and then match up the product. You do not want to have a locked-in product if it's going to be a short build or infill. You really want to have somebody sit down and work this out and also provide you if there's going to be overruns, if it's going to take longer than expected. How are you protected with the rates? The flexibility part would be the operating line. So an operating line means you can draw on it and pay it down whenever you like. You're in charge of what happens. You can pay it off whenever you want. So it adds that flexibility and also that comfort, and you're not spending your money if you don't need to spend it. And you're not paying interest if you don't need to pay interest. So your complete down payment will be required. Once you purchase the land, then you're going to have to inject the down payment with us, because we're going to make sure that we're not going past the Bank Act. We want to make sure that your down payment is injected, and then we start with our mortgage. Because what we have is we have a product called a Purchase Plus Improvements. And I want you to know this because it's something that you should utilize, especially if you're going to be listing your home. Make sure your realtor understands this, and if they don't, put them in touch with us. What we can do is we can actually position the house. If we already know your kitchen is dated, what we'll do is we'll actually build in the mortgage on the feature sheet. So your feature sheet is what your realtor usually puts in your home to showcase your house. We add in the fact that this is what the mortgage looks like. As an example, if the purchase price is $300,000, this is what the mortgage looks like. Now, if we add in $50,000 right at the purchase to fix this kitchen, here's what your payment is. And it's usually a minimal difference. And most clients don't know that they can do the Purchase Plus improvements. Most clients get stumped by, I don't have the money to do the kitchen, I don't have the money to do an ensuite or basement development. We can actually build it right in the mortgage. And with the new rules, if you do a refinance, you're limited to 85%. But when you do a Purchase Plus Improvements, your client can go up to 95%. So if you have penalties on your existing mortgage, we have ways and means of helping you out with that as well. It's all about advice and knowledge, right? So let's say you have a house and you have a mortgage on it, and your rate is 5% or 4%. And what you're going to face if you break that term, you're going to end up facing a penalty. There's several ways that we can work with your realtor to help ease that pain. So if you're going to be breaking a penalty, you have options. You can port your mortgage, meaning you can take the old mortgage and bring it into the new mortgage and blend the rate. Or what you can do is have your buyer assume your mortgage and they can port. One of the other pieces is if you want to make your house more desirable in this market, you can actually buy down your rate. Clients can buy down their own rate and then try to promote it as an assumable. Rate guarantees and holds are really, really, really important. We find so many people that get pre-approved and they don't know how long their rate is held for. What that means to you is if you don't know how long your rate is held for, you may be renegotiating and you maybe have to reapprove. At Bank of Montreal, it's a 90-day rate hold on our regular holds. But when we're working with our builder partners, we can go up to 36 months. There's several ways to do this, and I'm not going to try to inundate you with all the ways, but on a progress draw, which is what we would do for an infill. So in other words, we're not going to take the whole mortgage and give it to the lawyer, all those funds, because the house isn't built. So what we start off with is we finance the land, remember, anywhere from 60 to 80%. Then we get you pre-approved for a mortgage based on your specs and plans for your infill. So in other words, you've got to provide us with what you're doing, what kind of upgrades you're doing, the design of the home, everything. Then we bundle that all up and we take it over to the appraiser and we say, how much is this worth? And we also have the cost to complete. So now the appraiser will give us an idea through the appraisal exactly what that house is going to be worth when you're done. Now your cost to complete versus what is going to be done could be different. And we are going to work with what's called cost to complete, because we're not going to overfund something. We're not going to give you extra money because it's worth more. We're just going to look at what the cost to complete is. So the first draw has to be done. There's 4 draws, and I'll take you through that on the next slide. But the first draw has to be done within 90 days with us. That locks your rate. The final draw has to be done within 180 days to keep that rate. After 180 days, what we'll do is if the bill goes on longer, up to a year, we will actually blend the rate then after that point. The bank wants to work with a builder, and that's why we're here today. We really do want that backing of a builder. They usually have new home warranty, and that is key to the bank, because we don't want you to have problems getting access to contractors. So get pre-approved before you start doing things. And there's different pre-approvals. We all get those surprises as bankers. Yeah, I'm pre-approved. Oh, let's see your certificate. Oh, I just phoned in and they said, here's your payments, here's your income. Go start looking. Make sure you document and you ask questions.